So how do we acquire a good time bomb business with little or none of our own cash? Okay, well, here comes a good acquisition plan, but proceed with caution. Anyone who has been in a real battle will tell you the plan goes into the trash can after the first shot has been fired, because everything starts moving very fast. The ground shifts beneath you, things change, things you thought would work don't work, so you have to go back and rethink it. The true purpose of your plan is to give you the first track to run on and give you a sense that there is a way to get to your destination from where you are, to give you some inner confidence about what is possible. But then what has to happen is you have to constantly readjust the plan, realign it, reevaluate it, cut the fat, take out what is not working, put in what stands a better chance, try things new, test them, replace them. An acquisition plan to get you where you need to go is not a static one. You don't write and follow the plan and forget about it. You create and write the plan, and this is a living document that lives through all the twists and turns that it really takes you to get there. And you may go on some incredible detours in the whole process, but if you have the same end goal in sight and are taking a systemic approach with some flexibility and passion, you should get there in one piece, eventually. Persistence overcomes all obstacles, eventually. So here's a strategy and some steps we follow when angel investors are using the resources of our team at National Diversified Funding to acquire a typical time bomb business. We help angel investors buy companies with little or no cash of their own. Angel investors buy companies with our help using a process which is similar to how an individual would purchase a small hotel with, say, a 60% occupancy. Most hotels with a 60% occupancy will be cash positive. So let's imagine you wanted to purchase this hotel and it's valued at 10 million. Okay, and your plan is to add some value which will allow you to sell the hotel in the near future for 15 million. Our firm of principals and investors will get together on your behalf and raise at least £1 million against the purchase price. We will also go to the bank and other sources of financing, as well as our investors, on the back of our track record and credit facilities. So let's just say with the bank, let's say they will agree to lend us the remaining 9 million, payable over 5 years. This allows us to complete the purchase of the hotel on your behalf. So what happens now? Well, this is when the money is truly made, and it's something which is actually figured out to a large effect, or to a large extent rather, before the purchase is made. Based on your ideas for the hotel and ways that you envision that you'd increase the value, our main objectives are as follows. We want to pay off the debt from our financial and investor partners as quickly as possible. We want to increase the revenue at the hotel. We want to decrease costs which affect our profit margins and limit growth. And then finally, we want to exit the hotel venture at a higher valuation for all investors involved. That's pretty much it in a nutshell.